Hello A plus traders, welcome again to our channel. You all know my name is Anibitesa. If there is anyone who does not know my name, know now my name is Anibitesa. I'm the founder and the lead training coach at A plus Trading Hub. So today we are going to look at trading divergence. I don't know if you have heard of divergence, but if you have and you are confused and you don't really know how to trade divergence, after this tutorial, after this video, you get to know more and how you get to know more and know how you can actually trade divergence. So before we start, make sure you subscribe to this YouTube channel. Click on the subscription button below and also hit the notification bell so you don't miss any trade updates. As you know, I update series of videos on the channel every week, on the YouTube channel every week. So subscribe to the channel and also click on the notification bell. Alright, I believe your pen and also your notepad is around you because you'll be taking some notes. So today, no slides for anybody. I just decided to change the method of my trade tutorial today. No slides for you to copy. So pay attention to what I'm going to say. Don't miss any details. If there is anything you don't understand, write them down and you ask questions after the video. So first of all, what is divergence? Divergence is when the price of an asset is moving in the opposite direction of a technical indicator, such as an oscillator or maybe an RSI or maybe MACD. So basically what divergence in trading does is once that the current price trend may be weakening and in some cases may lead to the price changing direction. So sometimes you see on the chart like price is pushing up, but all of a sudden it changes immediately and start going down. You can easily spot when these moves are happening if you are using if you know how to spot divergence on the chart. You all know I use MACD on my chart. So I use MACD for two things. One, I use it to gauge the volume of a particular move and also use it to spot divergence on the chart too. So today I'm actually going to show you how I use the MACD to spot divergence. So let's jump into the chart and show you how we can do that right away. So first of all, on your trading view, or maybe if you are using MT4, just go to where you have all the indicators and type MACD. So you type MACD and this will pop up. This is MACD. You choose the first MACD here. Choose the first MACD there. So when you choose the first MACD, it's going to appear on your screen like this. So you see down here, you see another chart down here with a series of moving averages. So let's go to how we can set our MACD. Come down here, click the clock button here where you have the settings. Make sure your input on your MACD, the fast lane is 12, the slow length is 26, the source should be closed, the signal smoothing should be 9. This is the settings you should place on your MACD. Most of the trading platform comes with this input as a default setting. Then you go to style. This is the default color. You can tweak it or you can use it anyhow you want it. You can change the color maybe from green to blue, from red to maybe yellow, whatsoever you want to use it. But I prefer using the default setting. I don't like going all fancy. So for this, we are not going to use the MACD line and the signal line. So you untick it. You know, the signal line have disappeared and you click on OK. And here is what we have now on the MACD. Just the moves here, the signal bars here. See? So that is all we have on the MACD right now. So this is the settings and the format you should use for MACD if you want to use your MACD to spot divergence on the chart. Now before we jump to the how you can actually spot this divergence on the chart, I want you to have this in mind. So pick up your biro again and write this. Number 1, divergence signals when a trend is getting weak. That is one. Then also note that when you spot a divergence, don't jump on the trade just because you notice a divergence. You need to get some other confirmations, maybe from other technical tools, like maybe support and resistance, and maybe a trend line being broken, or a rejection from a trend line support or resistance, things like that, before taking on a trade after seeing a divergence. So the things you should do when you spot a divergence is: 1, stop riding the current trend, or you start trailing your stop loss. So once you spot a divergence on the current trend, you can either close the trade totally, or you start trailing your stop loss, start trading your stop loss. I'm also going to do a video on how you can trail your stop loss like a pro without second guessing yourself. That tutorial should be ready maybe by next week. I'm going to do that for you guys too. And then when you spot a divergence on a lower time frame, basically divergence is best used on the lower time frame. That is from the, when I say lower time frame for divergence, I don't include 30 minutes time frame, 15 minutes time frame. It's from maybe 1 hour. It's from 1 hour, 2 hours, and 4 hours, 8 hours daily, till you reach the monthly time frame. So when you spot this divergence on the lower time frame, let's say you spot the divergence on a 2-hour time frame, and so what you need to do is just jump to the daily if the divergence you see on your lower time frame is about to happen, by confirming with your higher time frame. Then also know that divergence is like an alarm. It gives you a warning when you are trading. So when you spot a divergence, just know that something is up, something's about to happen. Then you start preparing ahead, you start planning ahead. Bottom line, use divergence on a lower time frame. It actually helps in your entries. Your entries actually helps with your entries. So I'm here to share some charts with you, and these charts are basically the trades I took based on divergence last week, the Euro AUD and also the AUD JPY. So let's jump to the chart at once and look at Euro AUD. So here is the Euro AUD. When you are spotting divergence, don't try spotting a divergence in a ranging market or when price is consolidating. It doesn't really work well. It does not make sense. So you need to make sure that price is trending. Like what we have here, you notice price was trending down, but if you should see this, when price was here, if I should draw a straight line to this volume here, you see the volume was increased. Similarly, the same thing here, price, the volume was also increased, but this other point here where we have another lower lows, and I draw a line here, you see price then come to this downside. It was up here, so this is a divergence here. The technical indicator shows that price is moving in the opposite direction. On the chart price is pushing down, but on the MACD price is pushing up, and the volumes are reducing too. The volumes are also, you see, the volumes are reducing. The red bars are not thick. They are not thick. They are light. So this shows that there are no more volumes. There are no more selling volumes. No more sellers in the market. So when you spot this, like this kind of scenario on a higher time frame, for me, since my entry time frame is the 4 hour, I'll go to my 4 hour to make sure that is very, very clear. And this is the 4 hour time frame here. You notice I plotted that downtrend also. using a trend line. See, I plotted the downtrend using a trend line. Looking at from here, price was here, this is swing low, and we had this, it went low, and this is another swing low which actually went lower than this, but the volume didn't go lower, rather it was above this one, like this. So these are signs of divergence. Now price pushed down again, and if I draw a straight line down, you see that this one, price moved lower than this other swing low here and this other swing low, but on the volume on the MACD, price didn't go lower, rather price was here. So with this now, this is a divergence. On my 4-hour time frame, this is an entry time frame, this is a divergence here. You see, price is heading down, is going down, trending down, but on our divergence, on our divergence to price is pushing up. So when I spotted this, I was like, wow, so something is about to happen. If you notice, last week we were selling for short term, but I was like, okay, we may see a reversal because of this channel. So you see how I'm combining the divergence tool with also my technical tools, the channel, the trend lines, to make sure I have a perfect entry. Now when I spotted this first two move, this one and this one, what I did was I was like, okay, fine, I know we are moving in a downtrend inside this channel, and most times this kind of channels, from experience, this kind of channels breaks out to the upside like this, the way it's going. So I was like, I needed other backings to make sure that I'm on the right track, and I decided to pull out my pivot levels. So I pulled up my pivot levels, and okay, this was not last week pivot. Okay, let me bring up last week pivot. 1 minute, inputs. I'll show you last week. Yes. All right. Okay. If you notice, we have two pivot tool now showing on this chart. The first one here is this week's pivot level. This other one here is the previous week pivot level. So price was at S2, and what happens at support? When price approaches support, what happens? You look out for buying opportunities. So these were my confirmation. One, price was at support, that is one. Price pushed into pivot support S2. Then the next thing I saw was the bullish engulfing candlestick there. Let me try to zoom that in so you see well. Okay, this is better now. So you see at the S2 we had a bullish engulfing candle. So when I saw this bullish engulfing candle, I was like, wow, okay, that means this is an impulse. There's impulse in the lower time frame, the 15 minutes or the 1 hour time frame. So there's an impulse. That is why we are having the bullish engulfing candle. I was like, and also the MACD too, I saw the divergence, no more volumes. You can see we had the red bars were not thick again, was not really red again. They were fainting off. So I was like, okay, fine. So this is a divergence about to happen. So I waited for price to retest the S2 before I took my entry. So after seeing a retest of S2 on the 1 hour time frame, that is when I took the buy. I took a buy trade from here, from this level, and my stop loss was 380 hour below here, and my take profits is way up there. It's at the R2, the current R2 now, but as at last week it wasn't R2, but my take profit is at the current R2 now, around here. So this is how I was able to spot divergence, and I combined it with other technical tools to make sure my bias is very, very solid. And you see, all of a sudden price pushed up, boom, and we are up there. So right now, if you still want to join this trade, all I need to do is wait. I've not closed this trade yet. I'm still trailing my stop loss. All I want to see price slope down, bounce on this new PP, this week's PP, bounce here. When I get a bullish impulse from here or a rejection from here, then I will take another entry so I can have two positions on this particular trade setup and double my profits. Or I wait for price to retest this trend line, which is also in confluence with the support one of the pivot 2. So when I get that strong rejection from here or impulse, I take a good buy from there, you know. So this is how you use divergence. Let's look at another example. This time we are going to use AUDJPY. So we start from the daily. Okay, this is what is happening on this chart, and I'm already seeing a divergence here. If you look at this from here, price is doing what? Price is trending up. Price is moving up. This is it here. Price is pushing up. But on the divergence, see here, this is a swing high. Draw here. It's high. It went higher. This another higher highs. If you see this higher highs is higher than this other one, and it also reflected here by it pushing higher. But this other one, this other higher high, which is also higher than this previous higher high, you see there is no volume, it went down. So that is divergence there. That is a clear divergence there. So if I'm to draw my divergence, I can say this is the divergence here. That is price pushing up, but on my divergence too, price is actually pushing down. So with this in mind, we now go to the lower time frame, the entry time frame, so that we can actually use this signal or this sign we have seen from the divergence to better time our entries. So this is the lower time frame. I need to reduce this so we see it clearly. Alright. So okay, so this is what we have now. See, price pushing up on the chart, but the divergence tool is heading down. Let's mark it up again. See, here was a swing high, a higher high. We come all the way back down, draw this to the downside. You see it went high, another higher high at that same level. My drawing is bad. At this same level, we bring it down here. We didn't have any volume at all. This volume, you can't compare this volume with what we have here, and price still went up to that same high. Now another one, higher high, swing high, we draw it back down here. You see, no volume at all, and you can't compare it to the volume we had here when price was at these highs. So this is a divergence on this. This is a divergence here. If I should draw this, you see it's heading down. I can even start from here to draw it, and you notice it's heading down. So this is a divergence here. So after spotting this, you know that price, there's no volume around here. There's no volume around here. That price is just like a fake move. It's just like a fake move. When you notice that, you bring up maybe your pivot point, or if that is your area of support and resistance. And if you should see last week, that was R2. Price was at R2, and we actually got a rejection from there, a price rejection from there. So that was a signal for you to join. So you take a sell signal immediately. We had that doji there, the gravestone doji. Immediately you had that gravestone doji there. You take your sell entry from here, your stop loss actually from here, and your take profit will be at this S5. Or if you're not that, if you won't be patient enough to wait for price to reach A5, your take profit should be at S2 or S3. So this is actually how I use divergence to trade. This is how I use divergence to trade. I don't complicate matter. I make it so simple. But you notice if you should go online and search, so you get so many strategies on divergence. People will even tell you, okay, actually there are two types of divergence. We have the bullish divergence and also the bearish divergence. Those are just terminologies. What I just explained to you now is I just explained the two for you. The bullish, this one was going up, bullish divergence, and the Euro AUD was heading down, bearish divergence. So it's as simple as that. So I don't like boring my people or my friends like you with too much terminologies. I just want you to get the point and get the understanding. So once you jump onto the chart and start practicing and start spotting these things, you can easily trade them and make profit with them. So like right now, price have broken down this trend line. If you still want to join the sell, you need to wait for price to retest this trend line, give you a bearish impulse from there or a strong rejection, then you sell it down to the 64 or 63 price zone. So that is how you spot divergence using MACD. And don't forget, you can also use stochastic to spot your divergence. You can also use RSI, but I prefer this MACD, because apart from just looking at the divergence on the MACD, you also see the volumes too. You can also see the price volumes, and this volume actually helps you to know if we have more traders selling or more traders buying at a particular given time. So it's always better to use the MACD for your divergence, unlike just using the RSI or the oscillator. Alright, so that is all I will cover on this particular episode. Don't forget that once you spot a divergence, stop riding the current trend, or you start trailing your stop loss and look at the higher time frame to know if actually the divergence is clear or is real. Sometimes price may just fake a divergence. It's trading, so you need to keep an open mind whenever you're trading. Then don't just take a trade because you saw a divergence. Make sure you look at other technical tools and know if price is actually at a key price zone or level, and you don't just spot this divergence at anywhere in the market. You spot them as key turning points. If you should look at this chart, for example this AUD JPY chart, you know that this high is there. The high there is a key turning point. Let's go to the daily. Let me show you this at once. Reset. Okay, if I should draw a support, okay, resistance, because it's below CMP, so it's a resistance, and I look at the monthly. Okay, you see, so here is a key turning zone. You see price bouncing off here. This was close, and this one is was a close one, another close one, another one here and here. So that zone there is a key price zone. If I'm to plot a zone, my shock absorbers from here, this is what will happen. This is how I do it. So that zone is a key price zone. So you don't just spot this divergence at the middle of nowhere. You need to wait for price to approach a key turning point, maybe a key supply zone or a key demand zone. When price approaches there, that is when you start looking at for this divergence, and you start looking at for them on the lower time frame, so you can use it to fine-tune your entries. So don't forget, divergence is like an alarm when you are trading, and when you see divergence come out, you just know someone is telling you, hey, relax, stop, something is going to happen soon. So all you need to do is slow down. Maybe you can take partials, maybe you can reduce your you can start trailing your stop loss, or if you are not comfortable with what you are saying, you go out of the chart at once without wasting time. So I hope you understand my explanation on this particular episode and training on divergence, and also going to practice this on the chart, because it's not just looking at this tutorial once. You need to go through it one, maybe up to 2 or 5 times before you get a perfect understanding. And don't forget, if you like this tutorial and you love it, you learned a thing or two from it, make sure you like this video. And if you have any questions, comment on this video. I'll make sure I come and reply you and do more videos for you so that you understand better. Alright, so subscribe to the YouTube channel. Thank you and bye.